Hi traders, Shawn Lucas here, head trader for the Apiary Fund. So good to be with you today. We're going to, I thought, Fed announcements are coming out here in a few minutes. FOMC notes from their January meeting. This is Janet Yellen's last Fed, her last meeting as Fed chairman. And so I thought, what we might do today is just do some trading and see if we can catch some volatility during these Fed notes, the announcement of the Fed notes, meeting notes. I don't know what I'm saying here. Anyway, great to be with you today. And just a reminder that the month of February is our Valentrade month. We're posting, we want to show the world that Apiary Fund traders love trading. And so we're posting any trade results, doesn't matter, positive, negative, whatever. Just trade your trading results on our Facebook page. That'll enter you into a drawing for a set of Apiary Fund coins. And who knows, we've got a new coin coming out. We're excited about that. That new coin will be we will be releasing it at the summit coming up in March. And so we might just go ahead and throw that new coin. So there would be four coins in this new set. So make sure you do what you can to post those trades and enter that drawing, and hopefully your name will be drawn from all those entries. So just kind of a preview for today's meeting. Really, the question boils down to, all the action was already, we already know what the Fed did, right, in their meeting. We know the outcome. But what today does is it kind of gives us an insight into the discussions that the Federal Reserve was having during their last set of meetings. And so what we're going to be looking for, I think what most traders are looking for, is whether there's a tip of the hat towards 4 rates increases in the month or in the year of 2018, or whether we're only going to see 3 rate increases. So, people will be scouring the notes, as quick as they can to try and get a feel for what's the most likely scenario. Now, again, it was Janet Yellen's last meeting, so there won't, under new leadership, you'll tend to see a little bit of change, in the upcoming Fed meeting, but regardless, there will be some indication as to whether they're leaning towards 3 or 4 or maybe even 2. Either 4 or 2 will be a surprise either way. So, and we'll see that reflected in the price action. So we're about 6 minutes away from that announcement from the release of those notes. So we'll get trading here and get set up here in just a second. Just so you know, the current rate expectations, they take a survey or they analyze, what people expect, and currently we're sitting at about 2.76 rate increases for the month or for the year of 2018. So right at about 3, so 4 would be a surprise, and 2 would be a surprise, obviously. But another thing that you might want to consider is there might be some indication, in fact, in some of the speeches that the Fed presidents have made in recent years, is that there might be this little bit of a feeling that, hey, you know what, we've kind of run a little slow for the last year in terms of growth in the economy. And so there might be an inclination for the Fed to let rates, to not be so hawkish on rates and let the inflation rate speed up a little bit. Maybe even hit over the 2% target, up in the 2.5, 3, maybe even 3% target, inflation target. So like I said, a lot of economists right now are they're kind of chatting about that, and we'll obviously, that's something to consider as well, because if they're actually targeting above a 2%, they may be a little more dovish on raising rates in 2018. So there might be a really big surprise to the downside. Regardless, we won't be sitting here today. We won't be sitting here looking at the notes. We'll let the economists and we'll let the big players do all of that fast action analysis. What we'll do is we'll just take advantage of any volatility that comes into the market and hopefully make a little bit of money in the process. So let me kind of slip over here to the trading platform Albio. And you can see this is pretty common price action that we see during the pre-release. Look at that. For almost 20 minutes there, it just went almost straight sideways. Then we got a little bit of a traders are saying, I don't want to, this is just boring. So they try and move it one direction, and then they push it right back up, and really we're right back in that sideways price action again. So that is these are our ranges that we'll be looking for. We'll look for the market to break above these levels, and obviously that'll be a key level right down there. Now initially, right out of the gate, we might see a little bit of a whipsaw on today's price action. So I think what my approach will be let the notes hit, let some of that initial up and down movement, kind of work its way out of the market, and then see if we can start to catch some of the volatility after the first few seconds, maybe minutes of trading. So we'll keep a close eye on that. We're 2 minutes away from the notes being released right now. So we'll keep a close eye on that. I've got a 5-minute chart on the right over here. I've got a 1-minute chart on the left. Buy, sell signals. I'm currently got a 3 pip target. We could probably raise that since we do expect a little bit more volatility. Actually, I think I'll keep that at 3. And what I'll be anticipating and hoping for is a lot of trades, small profits, a lot of high in, out, in, out, in, out. In this price action here. All right, so we're rallied all the way back up to the upper ranges of that sideways consolidation. I think it might be worth noting as well that we have seen a pretty strong strengthening of the dollar. So the dollar has definitely strengthened in the past few days, and so. Will that trend? Is that trend in anticipation of what we might see today? Maybe, but I think that's reflective of a bigger concern, over the European economy versus the U.S. economy right now. So I don't know that this price action, the strengthening in the dollar, I don't think that has much to do with the Fed notes per se, but as an actual read or an analysis of the economy itself. So, all right, now we're down to just a few seconds before I'm going to go ahead and, do we get something? We got a little price movement, a little jungle there. I'm going to delete some of these. You can see that price action start to pick up. A little bit of volatility. There's a downshoot. And I'm going to pick up a little trade here. I'm just going to catch a little bit of that volatility. Picked up a long, and I'm just looking, just expecting, just trying to pick up, some of the bouncing around that happened. So that was good. Here's where we're going to start to see some direction and real direction start to play into the market. So a little bit of strengthening here. We're now in the notes have been released now, and you see it's bouncing around right now. We're going to give that a second to kind of work its way out of the initial reaction. and still bouncing around a lot. Real indecisive, right? Not a lot of confirmation one direction or another. There's a little bit of a strengthening that's happening there. And we might want to pick up a little, if we break above that high, I might want to pick up a long. So I'm going to drop this down. Volatility is not real. So we're going to pick up a long and see how we're holding up in the upper ranges of this. Now this may completely deteriorate on us, but I'm going to pick up another long. And one more here. It was holding pretty solid up in that upper range. Since then, it's kind of weakened a bit, so we'll kind of keep an eye on that. If it holds this, yeah, now it's looking like it's going to drop a little bit here, but it's just not a lot of conviction. So this is, you know, playing data releases like this can be a mixed bag. Sometimes you just get a runner. Other times you get really whipsaw, you know, up one direction, down another direction. Let's go ahead and put a sell in and another one and another one. So now I'm in three longs and 3 shorts. And I might pick up another long here. Watch how this, we're going to watch how it behaves around this previous pivot point. Okay, so a little bit of a rally there. There we go. Now we're still in 2 longs and 2 shorts right now. So not, you know, we're not really making any money at the moment. Now this is starting to build a little bit of strength. So again, let's put another long in up there. If we, any kind of pullback, I'm going to close out of those shorts. Close out of those shorts. Put another long. Now we're really seeing if we can break these highs. Market kind of wants to do that. So let's do another one here. And another one. Let's build another some bigger moves, possibly. And we'll watch that break. So we're really building in for a break to the upside here. Whether it happens or not, that's the big question. And if we scroll back, you know, we're kind of just going to see if we can test these old highs back over here. So the longer it sits there, the more it's going to have a reason to drop. So want to kind of be careful about getting too top heavy, literally, right? A little too top heavy right here. There we go. There's the break. And we've closed out of all of those trades and picked up a little bit, recovered from all of those losses. Now you see over here on the 5-minute chart, we came all the way back up to the previous highs and a little bit higher. So this is the true test of the breakout. And if we scroll out here, starting to form a little bit of a rounding bottom here. So how price we're not out of the woods for the longs yet, so there's still a lot of downward pressure on this thing right now. But that's a pretty good strong candle on the 5-minute chart, and possibly looking for an upward trend for a spell on the 5-minute chart. Zoom in there, and we really just didn't get much. We haven't seen a lot of build in the momentum. It's starting to now. So yeah, now we're starting to get, you know, 1, 2, 3, 4 candles, 4-minute candles in a bullish direction. Let's see where that puts us on that 5-minute chart. right up here against these highs. Now some follow through. I'm going to go ahead and short. I'm going to pick up a little bit of volatility, maybe a little bouncing there. Pick that up, and then some longs. Build in some longs. So what we're seeing now is we've had the breakout. We've seen the breakout, right? And this is sort of our first retracement, first test of the first down leg after the breakout. So for those of you who follow our trading a lot, you'll know that this is kind of something that happens and something we look for. We look for that market to break out, and then we look for the retracement. And then if we can catch the first turn after the retracement, that's usually a pretty good trade. Really kind of starting to hit a little bit of resistance in here, but this is just normal price action. You know, as this trend builds, more and more people will be piling into this. And so we could see a pretty good move. We could see a pretty good move to the upside before we get a real retracement. Another thing I'm watching right now is how these wicks are forming on the top of these candles. So wicks, typically when you see good strong price action in a trending market, you'll see the market close at the upper ranges. So you'll see the market close up at the upper ranges of the candle, right? Up here, up here, up here. So if you get into a situation where you start to see a lot of these wicks form on the candle, a lot of high wicks, you know, that's an indication that it's hitting some resistance in those areas. So you can kind of see we closed at the high range here, high of the range here, high of the range here, and then we're getting some wicks, and I presume this will have a little bit of a wick to it, unless we get another break, another push of momentum. By the way, those of you who are following us on YouTube, we are our Trader on the Street. We're going to be doing another Trader on the Street coming up. We're super excited about that. We'll be looking to hit the road next week, and possibly Tuesday. Try and find someone I can trade with. So stay tuned for on our YouTube page and watch me trade with some random person and see how they fare in trading real money in live market conditions. So stay tuned. We'll try and let you know when that actually happens. All right, you can start to see bodies are forming a little bit of a resistance layer here, which is great. This will give us an opportunity to start to pick up some. It gives us something to work off of, I guess, is the real thing. So I'm going to go ahead and pick up a long here. And another long. And I pulled the profit target back to 2 because of the volatility. It's been a little bit choppy this morning. Not real strong. We're not covering a lot of ground in our price action. And so I'm just playing it safe, just picking up, you know, literally just picking up pennies out of the market. Interesting how this bar is forming. Another wick on the high side, another candle high. This candle, you saw how it was kind of holding its body up at the highs there. It's since pushed through that. It's really trying to push through that right now. I'm going to give that a second to to move. And then I'm going to put a short in. Ooh, I was a little early on that. So a little early on that trade. And a lot early, actually. Usually I like, before I do this, I'm looking for 2 candles of break. But I was thinking, you know, that the market's got a little, it's having a real struggle trying to push up above these levels. So you can watch how that price forms. It's pushing up, but it's not, there's a lot of pressure on it, pushing it back down. So anyway, got into that a little bit early, but probably, I think I broke even. Yeah, I'm getting a lot of slippage too because of a lot of slippage in the trades. 2 pip target, and I walked away with an 0.8 pips of profit. So that's not very good. Pick up a long here. There, did okay on that. Again, that's a point. We're not getting really good fills in this price action. Just to kind of explain that, you know, slippage is really a big. Slippage is it's a thing, right? It's something we have to deal with as traders. We can only, most of our internet connections, especially if we're, you know, on a home connection or something like that, most of our internet connections can handle only so much bandwidth. So if you think of water going through a hose, right? And you think of a little straw, if you hooked a little straw up to the outdoor spigot and you put water through that, you know, you're only going to be able to put so much water through a straw. But if you put a garden hose on it, you can get more. And then if you get, you know, put a fireman hose on it, you can even get more. Most of our internet connections at home are going to be the size of a straw. And meanwhile, in a market like this, we're going to be pushing through loads and loads and loads of data, and so your computer won't pick up everything that's happening. It just isn't possible for it to pick up. And so what happens is you get trading that's happening, it's happening. Meanwhile, it's trying to send you all of that data. And so you go ahead and place the order in. Well, you're trading on the newest information. Your order is trading on the newest information, but you're only seeing the oldest information, right? And so that's why slippage it tends to happen. And, you know, as traders, we don't like that. So the simple solution is to, set up closer and closer to the source of the data feed. You know, obviously, if you can get a big fat connection as close to the data source as you can, then you're going to eliminate a lot of that slippage. Another challenge for retail traders is that, you know, your brokerages, they limit that data just because of the size and scale. They have to limit that data. They can't push through every tick. And so, you know, finding a good retail broker is kind of hard because, you know, their job is to maintain stability, and they do that at the expense of loading you up with data, right? And so you kind of have to juggle that. Looking at it, kind of fizzled out a little bit in our price actions, really kind of just fizzled out a little bit. Look, we might get another leg up here. We might get another leg higher. We could definitely place a trade here. But to be honest with you, this is right now. This is kind of not acting like it wants to be real volatile. Looks more like it just wants to kind of fizzle out. I haven't read obviously I've been with you, so I haven't read the notes from the Federal Reserve, but my guess is that they kind of came in as expected. Not much of an indication towards 4 or towards 2. Not much of a surprise. I wouldn't expect that, being Janet Yellen's last presiding at her last meeting. But I do think that looking forward, keep an eye on Powell. Keep an eye on some of the speeches that he makes, and I think you're going to find that he'll start to find his legs in the Federal Reserve, and a little bit of what we're used to might change moving forward. I'll be looking for that, sharing it with our good traders at Apiary Fund. But I think, folks, I'm going to wrap it up for the day, and it was a pleasure trading with you. I hope you had a good time. I hope it was insightful. I hope you never know what it's like, a box of chocolates, right? As Forrest Gump says, you never know what you're going to get until you bite into it, and that's what we got. Some announcements will be bigger, some will be smaller, some will go nowhere, some will be everywhere. So we just kind of respond and react to the market as it tells us, and that's what we try and practice as much as possible at the Apiary Fund, and our traders do a great job of it. At any rate, I'm going to sign out for now. Happy trading, everybody. Don't forget to post your trades to our Facebook page to enter into our drawing at the end of February for the Happy Valen trade. And we'll see you next Wednesday for our Facebook, and check us out. Stay tuned as much as you can, because we may be doing that Trader on the Street next week, next Tuesday. Thanks, everybody. Happy trading.